So in my opinion, these people right here are house poor. They cannot afford this house. Hey everybody, welcome back to Whiteboard Finance. My name is Marko and I'm here to help you master your money and build your wealth. So today we're talking about a very important subject, specifically about how much house can you actually afford. The reason this is such an important topic is because buying a house is typically your biggest financial decision that anybody will ever make, and it needs to be the right one, otherwise you can see yourself in big trouble very quickly. A lot of people suffer from being house poor, so I thought to myself, dude, that's not going to be me. I want to live below my means because my wife and I are actually looking for a house right now, and knock on wood, we're looking for our forever home because we do want to start a family. So I took my financial skill set and I created this spreadsheet that I'm going to share with you guys today. So let's get right into it. So very simply put, anything that's a yellow highlighted field is something that's going to be an input. So you know you need to put something in here. So very simply, let's start with the house price. So my wife and I are looking in Northeast Ohio, specifically suburbs of Cleveland, and the houses in the suburbs that we're looking at, they're probably going to be in anywhere from the $250,000 to $300,000 range. Okay, keep in mind this is our forever home, and houses are relatively affordable in the Midwest compared to Los Angeles, San Francisco, New York, and all that good stuff, right? So let's just say for easy numbers, let's use $280,000 somewhere in the middle, right? So the spreadsheet automatically calculates 20%. So the reason you want to put 20% down, and that's exactly what my wife and I are planning on doing, is because you want to avoid PMI, which is private mortgage insurance. So for people that haven't gone through the house buying process or don't know what PMI is, that's essentially just a little bit of a bill that doesn't go towards principal or interest. It just goes towards private mortgage insurance, meaning that it's just money that you're throwing away. The reason that the banks or the lender wants to see PMI if you're putting less than 20% down is because it shows the bank that you, or the lender, that you have skin in the game, meaning that you're not just going to put down 2%, and if your house is underwater or loses a lot of value or you can't pay for it, you just walk away with pretty much no money in the deal. So they want to tack on that PMI to make sure that you're committed to that loan, if you will. So ultimately, we're putting down 20%. So you can see here, 20% of 280 is $56,000, meaning that the actual mortgage or the loan amount is $224,000. So the annual interest rate for a 30-year mortgage, at least right now, is going to be about 4.5%. So my wife and I are pretty much going to be looking at a 20-year mortgage, and with what I'm estimating is going to be a realistic annual interest rate, we'll probably end up somewhere in the low fours. So let's just use 4.1 for example. Now, the next field here we don't touch. This is the number of payments per year, meaning that you're paying once a month. You're not paying, twice a month, meaning 24 payments. You're not paying 3 times a month, meaning 36 payments. You're making 12 equal payments throughout the year, meaning that your payment per period, with all factors being considered, is $1,369. So the sum of the payments with all these numbers combined is going to be actually $328,000, meaning that you're paying $104,000 in interest over the course of 20 years at 4.1%. Now let's just do a quick little experiment. Say we push this loan out to a 30, meaning that the terms, the rate is a little bit higher, and we added 10 years to the payment. That $328,000 total now got bumped up to $408,000. So can you see how powerful that is on getting a shorter loan with a lower interest rate? You're literally saving $80,000 right around there. So now let's move forward. So these types of houses that we're looking at, the taxes are probably going to be anywhere from $5,000 to $6,000 a year. The insurance, let's just say easy numbers, let's call it $1,000. And typically, if there's an HOA, we'll put it in there as well. So for those of you that don't know what an HOA is, it's just simply a homeowners association fee. So if you see nice big developments, they have manicured lawns and landscaping and all that stuff. That's pretty much what you're paying for, right? So ultimately, all these numbers combined, so we have the mortgage, the tax, the insurance, the HOA, all that stuff broken out to a monthly basis, we're looking at just under $2,000 a month. Now I went a little even more conservative and added $300 a month for utilities. So you may have gas, water, sewer, electric, anything that the city mandates that you need to pay, and also to power your house. We're not running on a treadmill to turn the lights on, you know what I mean? So ultimately, there's two schools of thought now. So we know that we're in right around for $2,200 a month, but it all depends on what you make, right? This is all relative. So what is the appropriate number on how much house you should be able to afford? Some people say 30% of your gross. Some people say 35% of your gross. Some people say 28% of your net. It all depends on what your level of risk tolerance is. So keep in mind, I'm relatively conservative. I don't want to be house poor, just to keep up with the Joneses and live in a big McMansion, right? I do want a nice house where I can raise my family, but I don't need to show off to anyone, right? So I'm actually going to be using Dave Ramsey's strategy of 28% of your net. That should be all of your housing expenses. So that bottom number that I just showed you. So 28% of your net income is a big difference than 30% of your gross, right? Gross makes no sense, people. Why would you base your mortgage payment or your housing expense off a number that you don't actually realize, right? So my gross could be $1 bajillion, but if I'm paying, commission and taxes and all this stuff, and I'm taking home another amount, I can't live high on the hog. I can't act like something that I'm not, right? So I just advise you guys to be a little bit more conservative. So we're going to go with 28% of our net. So person one, these aren't what my wife and I actually make, but these are just rough calculations. So let's just say my wife makes 50 grand a year. Let's say I make 55 grand a year for easy numbers. I added another row here called extra income because some people may bartend on the weekends. They may have a side hustle. They may, do whatever outside of their ordinary income to where they can, throw some money in here. If you pick up overtime or whatever, there's a ton of opportunities here. So ultimately, we added all that up, okay, and we came out to a gross income of $110,000. Now, what did we talk about? I said not to use your gross. I said to use your net. So I took this spreadsheet just a little bit further, and I multiplied the gross by 69%. So if you can see this here in the top left corner, the reason I multiplied it by 69% is because once you figure, Roth IRA, 401k, taxes, federal, state, local, whatever. When you take out all those taxes, you're pretty much taking home 70 or 69% of your income. I just went on 69 because it's a little bit more conservative and it'll get us closer to a realistic number, right? So now what we're seeing is the mortgage is taking up 31% of our net. So that's just this number right here, that number that's close to $2,000. The utilities and the mortgage and all that good stuff, if you throw in that extra $300, this is coming out to be 35% of our hypothetical net income. And after the housing expense, so you have your take-home income after your housing expense, you're taking home $4,000 in a month, right? So in my opinion, these people right here are house poor. They cannot afford this house. Okay, if they kick it out to a 30-year mortgage, you're getting a little bit closer. Even if I adjust this interest rate right here, they're still at 32%, a third of their income. So 1 out of every $3 they make is going to their housing, which is ridiculous. That leaves you with no money to go on vacations. That leaves you with nothing to invest. I mean, you're pretty much living off $4,000 a month. Imagine having kids. Imagine having a dog. Imagine having, God forbid, a health concern or something like that. So ultimately, let's see if these people's income improve. That's why I created 2 columns here. So let's say my wife's income, let's say it stays the same, but I get promoted at work and I start making 75 grand a year instead of 55. And let's say my wife picks up some overtime, I'm getting some YouTube money, whatever. Let's just say our extra income is 10 grand. So now instead of 110, we're making 135, and now this house looks a little bit more affordable. We're closer to that 28% all in. That's with utilities, mortgage, tax, insurance, HOA, mortgage payment, all that stuff, right? So now this $280,000 house is looking like we can actually afford it, right? So it's a little bit above that 28% of net, but you can see here that this helps you put into realistic perspective of what you can actually afford. And sometimes what I like to imagine is, say my wife's making 50 grand, I'm making that 55, and then YouTube blows up and I just start making like 250 grand a year. No, I'm just kidding. Hey, buy my course so I can afford this house, you guys. So ultimately, I hope this spreadsheet was helpful for you guys. If you want the spreadsheet, give me a shout. Just remember that the rule of thumb is to stay at about 28% of your net income. And I didn't even factor in, if one of us loses our jobs or one of us gets sick, that's with 2 incomes. So you got to be extra careful, you guys. The beauty about that calculator is that you can be as conservative or as lenient as you want to be. But again, shoot for that 28%. That way you have some money to invest, you have some money for a rainy day fund, and you also have some money for traveling. Otherwise, what's the point of living, right? So thank you so much for watching, you guys. I really appreciate it. There's going to be a PayPal link below. If you want to donate to the house fund, please do so. If you want to actually literally sign up for my course, all joking aside, it's a great course. We have about 40 students in there, and we're doing a great job. I seem to be getting a lot of positive feedback from that. Thank you so much, and have a prosperous day.